In this video, I'm going to give you a detailed breakdown of the loan estimate. And after watching it, you'll know exactly what questions you want to ask of your loan originator or mortgage broker. Step number one when reviewing your loan estimate, make sure even the most minor details are accurate. The spelling of your name is extremely important, and if spelled wrong, could cause major issues later in the process. Number two, when reviewing your loan estimate, check the loan term, purpose, product, and loan type. If your lender's courteous, they'll make sure this information matches what you discussed. Step number three when reviewing your loan estimate, check whether or not your rate is locked. Not all lenders lock your interest rate at the time they disclose a loan estimate. So if you think that you're protected and your rate's not locked, ask your lender to do so right away. Step number four, is that the loan amount you requested? Make sure that your loan amount is equal to your purchase price minus the down payment you're expecting. If those don't match, get with your lender immediately and have them make the correction. Step number five, make sure you're receiving the type of interest rate you expected. Is it fixed or is it adjustable? Now, most people are opting for a fixed rate nowadays because we all know where rates are heading. Step number six, does your loan have a prepayment penalty or a balloon payment? A prepayment penalty would be a percentage of the loan that you're required to pay if you were to refinance or sell the home early. And a balloon payment would mean you owe the entire balance left on the loan prior to the end of the loan term. Example, a 30-year mortgage where the entire balance is due after only 10. Step number seven, your total monthly payment. Make sure that payment is what you expected, and more importantly, something that you can afford and you're comfortable with. Step number eight, your homeowner's insurance, property taxes, mortgage insurance, and any sort of homeowners association fee you need to pay for that property. Make sure those numbers are accurate. Make sure the insurance matches any quote you received for that home, and that the property taxes match the most recent tax bill. Step number nine, review the amount of money you're going to need at closing. This is a combination of all the costs you incur to buy the property along with your down payment. Make sure that number is what you're expecting, and more importantly, that you have the money to bring to that closing table. Step number 10, we move on to page 2 of the loan estimate, section A. These are the charges that are coming directly from the lender that you're working with. These would be things such as discount points, any sort of origination fee, underwriting processing. Some lenders actually charge an application fee. So it's important to review this section in detail, make sure that it's all the costs you were told you were going to pay and that you were expecting to pay. This is also the section you want to utilize when comparing one lender with another. Let's move on to number 11. Section B, page 2 of the loan estimate, services that you cannot shop for, which are really just miscellaneous third-party charges, such as the appraisal, which will help determine that the value of the property is equal to what your purchase price is, and then determines exactly what's being lent upon. It also includes a credit report, tax service fee, credit monitoring fee. Different lenders and different services are provided, which can cause these fees to vary from one lender to the next. Number 12, page 2 of the loan estimate, section C, services you can shop for. These are things such as all of your title fees, a survey of the property if one's required, pest inspection. Now, if you have questions on what the title fees are, it's best you speak directly to the title company that's handling your transaction. Number 13, section D, page 2 of the loan estimate. This is the total cost that you're going to incur to purchase this property with a mortgage. It's a combination of A, B, and C. These are loan-specific costs that you would not incur if you weren't obtaining a mortgage to buy the property. Number 14, section E, on the left side top of the loan estimate, page 2, government charges and recording fees. Now, depending on where your property is located, you're going to pay a recording fee to the county in which that home is. And you're also going to pay fees to the state and county for the stamps on the mortgage. When you're obtaining a mortgage in the state of Florida, you're going to pay stamps equivalent to 0.55% of what you're borrowing. And in some cases, you may even be responsible for paying stamps or transfer taxes on the deed of the property, which would be equal to 0.7% of whatever you're paying for that home. Number 15, page 2 of the loan estimate, section F, prepaids. Now, this is going to be things such as your first year's homeowners insurance premium, as well as interest on the mortgage from the day you close through the end of the month in which you're closing. Number 16, Section G of the loan estimate, page 2, your escrows. Now, an escrow account is an account that a lender holds both taxes and insurance in as you make your monthly mortgage payments and pays those bills once they're due. So at the time of closing, you need to establish your escrow account. It's usually going to require roughly 3 months of homeowners insurance and 4 months of property taxes. Number 17, Section H, Other, on page 2 of the loan estimate. Typically, the only fee listed here is going to be the owner's title insurance policy. Now, this is a title insurance policy that protects you as the homeowner. It's not required, it's optional, but I certainly think it's necessary. Now, this is going to protect you for as long as you own the home, and you only buy it one time. So once again, Section H, Other, Owner's Title Policy. Make sure you get details from the title company handling your transaction, explaining exactly what a title policy does for you as the home buyer. Number 18, Section I on your loan estimate, page 2, is a combination of your government charges, your prepaid items, your escrow reserves, and those other, in this case, an optional owner's title policy. All of those items added together will equal the figure shown in Section I on the loan estimate. Number 19, Section J on the loan estimate, page 2, is going to be a combination of D, which were all the loan-related costs, along with Section I, all those third-party prepaids, escrows, and so forth. Combined, it's going to tell you the total amount and the total closing costs that you're going to incur when purchasing this property. Number 20, bottom left-hand corner, page 2 of the loan estimate, calculating all the cash to close. Now, this is going to show you your down payment, your loan amount, your closing costs. Make sure that all those figures match what you were expecting. This should correlate with what you saw on page 1. And the bottom line figure should be identical to the bottom of page 1, cash to close. Last but not least, lucky number 21, page 3 of the loan estimate, your comparison. Now, this is where you're going to see the amount of principal you're actually going to pay down on this mortgage within the first 5 years. It's also going to show you that ever important APR. But one of my favorite lines next to APR is, this is not your interest rate. On top of that, you're going to see the total interest percentage. This is the amount of interest you're going to pay over the life of the loan. Now, those were the 21 most important things you want to look at and understand on your loan estimate. If you still have questions, you're not quite understanding exactly what things are, make sure you get with your loan originator, have them sit with you and explain it directly. And if you have questions for me, don't hesitate to reach out.